Time for the hot pick section of the program. Our next guest is focused on base metals and has 3 plays in copper to tell us about. Let's bring in Dalton Baretto, Managing Director of Equity Research at Canaccord Genuity, covering metals and mining. Nice to have you with us. Let's talk a little bit about the copper story broadly first. We've highlighted it a couple of times today, but it has been finding some buyer interest. What's been going on, Dalton?
Yeah, the copper market today, first of all, thanks for having me on, John. The copper market today is seeing, what I'll call unprecedented upheaval. And that's on the back of President Trump threatening to impose tariffs of 25% on any copper entering the U.S. And that's caused a massive rebalancing of trade flows around the world as traders rush to bring in copper ahead of these tariffs coming in. And what we've seen is a historic spike in the U.S. copper price relative to the rest of the world. It's on the order of about $1,500 a ton right now, which is unheard of at this point in time. And so because of all this copper that's being funneled into the U.S., that's creating shortages elsewhere in the world. The market was really tight even before this happened. And so, China, the largest buyer, about 60% of consumption, they are scrambling for new tons at this point in time, as are many other markets around the world.
Really helpful context there. Now, we had a conversation earlier about how when investors want to get exposure to gold, oftentimes they have to come to Canada because we've got some big gold plays here. But in copper, there are some standout companies as well. So let's go through a couple of examples of companies you're watching. Hudbay Minerals gets a lot of attention. Walk us through Hudbay. You like Hudbay as an investment idea?
I do. And in fact, all of the 3 names I'm going to talk about on your show today, these are names that I have underperformed this year, but I believe are poised for a massive re-rate and a catch-up trade over the rest of this year. But we'll start with Hudbay, as I said. And the centerpiece of that investment thesis is their U.S. asset, which used to be called Rosemont, is currently called Copper World. With the change in administration and the sort of change in narrative around U.S. copper that I just talked about, this has become an immensely valuable asset in the portfolio that is being underappreciated by the market. And we're going to see that value start to emerge both in the near term. They are running a process for a joint venture partner right now. And I have no doubt that the valuation will come in ahead of what most people are expecting. But then also in the longer term, as they put this asset into production, and this is a U.S.-centric source of copper, the cash flow, the strategic value will speak for itself. The other big piece of the investment thesis on Hudbay that not a lot of people focus on is that they also produce about 250 to 300,000 ounces of gold, right? And with gold hitting record highs, they are a very low-cost gold producer. That's a massive source of cash flow and a tailwind for the company right now. And then the last piece is they've got huge exposure to the Canadian dollar as well. Their entire gold business is in Manitoba. They've got a small copper mine in British Columbia as well. They will see strong tailwinds from the lower Canadian dollar, particularly as copper prices priced in U.S. dollars move.
Okay, and listen, you're not alone in being constructive on that stock. It's generally well liked across Bay Street. Meanwhile, ERO, another symbol to watch in Toronto. Tell us more about that copper play.
Yeah, and this one's a little bit of a non-consensus call on my part. So last year they finished constructing a new copper mine in Brazil. All of their assets are in Brazil. And they've had some challenges with the ramp up, but most of those challenges are largely behind them. So when you look at that story today, they are on pace to double their copper production this year. Okay, and with a lot of the teething pains behind them. They also have, like Hudbay, have a decent gold business, 50, 60,000 ounces a year of very low cost gold. They're producing gold for under $700 an ounce at in a gold price environment that's over $3,000 an ounce. So another big tailwind for them there as well. And the valuations dramatically pull back based on some of these ramp-up challenges they had last year. And as they demonstrate to the market that these challenges are behind them, I think you'll see that stock re-rate.
Okay, helpful context there. And before I let you go, Capstone.
Capstone, this is worldwide the best growth story in copper. This is a name that's got scale. It's got a tremendous growth pipeline. They are going to go from about 185,000 ounces of copper production last year to 400,000 tons, excuse me, by 2029. And we project their copper production to grow every single year between now and then. And all of that growth is baked into the pipeline already. A lot of it is de-risked for the most part. So they built and are ramping up a new project. They will then debottleneck it. And then the next leg of growth sits right next door to the existing project. This is also a name that from a revenue percentage basis has by far the largest exposure to copper of its peers.
Really helpful context there, Dalton. Thanks very much. Three names that are worth keeping tabs on: Dalton Baretto,